I want to discuss 10 key disadvantages of investing in cyclical stocks. Investing in cyclical stocks comes with its own set of disadvantages. And so here are the 10 pitfalls we are going to consider in this video. Number one is high volatility. Cyclical stocks can experience significant price swings due to sensitivity to economic cycles, leading to increased investment risk. Generally speaking, when it comes to investing in cyclical stocks, their performance is tied to economic indicators. They are so sensitive to the economic cycle. When the economy is doing fine, doing well, cyclical stocks equally do well in return. And when the economy is in a downtrend, cyclical stocks equally tend to, go on a downtrend also. Number two, economic downturns. During recessions or economic slowdown, cyclical stocks often underperform, potentially leading to losses for investors. These classes of stocks are inherently tied to the economy, and so their performance generally dictated by the performance of the economy. During a downturn, these stocks go down. During an upswing in economic performance, these stocks equally tend to embark on an upswing as well. Number three, unpredictable earnings. The earnings of cyclical stocks can be inconsistent, making it difficult to forecast future performance accurately. You can very hardly forecast or predict the performance of a typical cyclical stocks in the future. So their earnings are unpredictable because the earnings of these classes of stocks, are tied down to the performance of the economy or are influenced by economic cycles. So just like you cannot accurately predict the economy, you cannot equally accurately predict the performance of or the earnings of a given cyclical stocks. Number four, timing risk. Timing risk. Successfully investing in cyclical stocks require precise timing to enter and exit the markets at the right point in the economic cycle, which is very difficult to execute. You enter at the right time and then you exit at the right time. For you to be able to execute this particular feat, it means that you should be able to predict the economy perfectly. So that timing risk is always associated with investment in cyclical stocks. Number five, sector concentration. Sector concentration, industry concentration. Investing heavily in cyclical stocks, can lead to a lack of diversification and highly risky if those sectors you are invested in experience downturns. So if you buy cyclical stocks in a sector that is not performing very well, in a sector that is experiencing a downtrend, then of course that sectoral concentration would result in a lower, if not a negative yield at the end of the day. So sector concentration is a major disadvantage of investing in cyclical stocks. Number six, credit and liquidity risk. Cyclical stocks can be more affected by changes in credit availability and liquidity conditions impacting their performance. Generally, when there's availability of credits, when companies can very easily access credit to boost their operation, in a typical bullish market or a performing economy, you discover that the risk may be diminished. But in the case where sourcing funds, is funds are difficult to come by to be able to run companies adequately because of the nature of the economy. You discover that that particular risk is always it's always pertinent, it's relevant when it comes to cyclical stock investing. Number 7, high beta. Cyclical stocks often have a higher beta, meaning they are more volatile compared to the broader market, which can lead to higher risk. Beta here is talking about volatility. Companies with low beta, they are less volatile compared to the volatility obtainable in the entire market. And companies with a high beta are companies that are most affected by volatility in the market. So if there's higher volatility in the market, those stocks will equally experience higher volatility. So generally speaking, cyclical stocks, they have a higher beta. Number 8 is market sentiments. Investor sentiment can drive price of cyclical stocks beyond their fundamental values, leading to a potential overvaluation during booms. Whether we like it or not, investing in general, investor behavior in general, is kind of, influenced by 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 emotions like fear, like greed, like sentiment, instead of the company fundamentals driving the market. In the short term, discover that market is driven by what? By emotions of participants in the market. And so cyclical stocks are so much influenced by sentiments, and these sentiments, most of the times govern, trends in the market. And so when the market is doing very well, you discover that the cyclical stock will equally perform well. But when market sentiments tend to go on the downturn, the stock will drop. When the sentiment is so positive, it will do what? It will climb to the point of overvaluation. That's a typical disadvantage of investing in cyclical stocks. Please subscribe to this channel and give me a thumbs up. And don't forget to hit the notification button so that I'll be encouraged to keep on bringing contents of this nature to you. Number 9, economic dependency. There's that dependence on economic performance. These stocks performance in heavily, is heavily tied to the overall performance of the economy, making them vulnerable to macroeconomic factors beyond the investor's control. Unlike other kind of strategies, this particular one, cyclical stocks, they are tied to the overall performance of the economy. And so for that reason, they are vulnerable, that they are easily affected by microeconomic factors that are beyond what the investor can even control. Is a notable disadvantage of investing in cyclical stocks. Number 10, increased competition. Cyclical industries often face heightened competition during economic expansion, which can erode profit margins and affect stock performance. Generally, when the economy is doing very well, these companies in these the cyclicals, the cyclical stocks, tends to attract competition, and the heightened level of competition will definitely, cause the industry, the companies concerned to lower their prices so as to be able to compete adequately, compete profitably. And by that, that particular act of lowering their profit to attract sales will eventually eat into profit margin. And with the lower profit margin, you discover that, even the overall performance at the end of the year or the quarter, will be affected negatively. So these disadvantages highlight the need for careful consideration and strategic planning when investing in cyclical stocks. Plan very well. research very well and consider all these disadvantages as well as the advantages to ensure that you are highly informed as it relates to your desire to adopt this particular investment strategy.